What's up, everybody? Tanner Larsson here, and welcome back to the Optimized Ecommerce Podcast. Super excited to be here with you guys, and I got another fun and pretty interesting episode for you guys today. I'm actually excited to see what we're going to come up with as Erik and I start talking. So my guest for today is Erik Huberman. He is the owner of Hawk Media, which Hawk is I guess the best way to describe you guys would be as like an outsourced CMO service. They work with some major companies, including Alibaba, Red Bull, Verizon. They also work with smaller stores and brands, like that as well. And they kind of have a full scope of what's going on in the e-commerce and business landscape, from running the ads to the marketing side to the, automation sides to how do you get profitability up, and just kind of, they see the whole gamut in the companies that they work with. And they do different things for different companies, but, Erik's got a really cool insight. The company's done very, very well. They've won some crazy awards, Inc. 500, all that kind of stuff. So he's got the pedigree, but they've also got the knowledge, which is what I'm excited to talk about with him today, and just extract what he knows on how do you take a product and actually turn it into a company, something that lasts, that has sustainability. And if you guys know this podcast, Build, Grow, Scale, we talk a lot about sustainability and long-term growth and actually having something that lasts. So having Erik talk into that today is going to be very exciting. So Erik, thanks for joining us.
Yeah, no, thank you for having me.
So, I know I kind of gave a little bit about you, but why don't you give a little Reader's Digest version on the bits that I missed that you think are important?
Yeah, given the topic, I've built and sold 2 e-commerce brands before I started this. And then Hawk Media, now we're 7.5 years old, completely bootstrapped, no outside capital, no debt. We got about 250 full-time people, manage marketing for about 600 brands. We've worked with about 3,500 brands at this point. And so, when you asked me to come on and talk about what I thought was a good subject, I thought sort of company sustainability and building a foundation for a good organization is something that's missed a lot in this space. And I think it's an important topic because I see, everybody loves to post on social media how they've had 100x returns on their ads for 2 days and they're skyrocketing. And then you talk to them a week later and their company's gone. So it's about, not just how do you get good returns on Facebook, which I think is becoming more and more boring subject, and frankly, more of a fleeting subject. And it's more about how do you build a company with a great product and the right marketing channels that build a long-term sustainable business. And I think that's, it depends on what you want to do. If you want to be flash in the pan, make some cash and cash out and call it a day, it's one thing. But I will say from experience, it's a lot better to have something that continues to give for a long time.
Yeah. And it takes a lot of work to build something from the ground up just to make some quick cash and then have to start over.
We're talking, it's the same amount of work either way, to be clear. Yeah.
When you have to continuously reinvent the wheel and start over, a new product, new audience, new demographic, new avatar, everything, man, do that once.
Yeah.
Not do that 5 or 6 times. Like I see guys all the time, like they've got 6 Shopify stores waiting for one to hit, and then that hits, and then they go launch 6 more.
Exactly.
It makes no sense in my mind.
No, you're not building up any momentum. You're not building off yourself. And so you literally, as you just said it, you're starting over every time. So you don't get that benefit of that progress. And so I've never liked the model. Again, there's people that make cash on it, but I generally from experience see them, they're a lot more outspoken about how they're doing in these things. I don't know whether it's got a surprise or what it is. So I see them attract a lot of followers where it's like, yeah, I just did, launch this product and it made $10 million in the past 6 months. And it's like, cool. And then you invested $10 million in inventory and couldn't sell a single item after that and lost all your money and walked away with nothing. Versus maybe taking it a little slower too is part of it sometimes. Maybe you only do $1 million in the first year, God forbid. Yeah. And then you do 2 the second year, and then you do 5 the third year, and then you do 25 the fourth year, and you start to scale it that way. You build a foundation. And then I have, thankfully, as my success has grown, I've been around a lot of successful people. And, I was hanging out with a friend the other day that's got, his company makes $50 million in profit now. He still owns it. He raised no money. He's trying to figure out what to do with the money. Like, he's like, all right, well, I guess I could keep growing it. Like, I just to be frank, once you're making $50 million a year and it's your money, there's nothing you need to buy. You've got it. Like you maybe a bigger jet or a bigger yacht,
but you've already got the main toys.
Yeah. And you could rent anything you want. So if you really, for some reason, need to buy a $500 million yacht, that's a different conversation. But other than that, there's no use for that capital. Correct. And so building something that does that can sustain, that you can operate, and again, there's only 24 hours in a day and everybody needs sleep, different levels of sleep. I'm not one of those people that needs like 2 hours of sleep a night, but let's just assume everyone needs a normal night's sleep. Like you were all working just as hard as each other. Like the idea of hard work got me here, I think is the dumbest thing in the world, because it's a level set. You work hard, you put in all the time, you're putting in the time. Then it's just a function of focus. Like, what are you spending your time on? And are you looking at what you just said, the next Shopify site to spin up, the sixth Shopify site that doesn't build off of any of the momentum you've already put the work in? Or are you tweaking and changing and growing that first thing that you started because you see that there's a need for the product or service you're providing, and you're reinvesting in it ways that create long-term sustainability for you and the company? Because I think a part of this is also making it so it's something you want to do for a long time, not something that you want to get out of as quick as possible.
Yeah, absolutely. And, that's a big part of it with seeing what's out there in the marketplace. Like you said, they attract a lot of interest, is this hypey, flash in the pan kind of money type stuff. But most of those guys are gone in a year or 2 years at the most. And, but the problem is so many people are following that advice to try to duplicate what they've done. And they wind up in an even worse situation because they didn't have the winning product, or they jumped on the fidget spinner after it had already trended out, and now they're stuck with inventory. And so let's kind of jump into what it looks like to build something sustainable.
Yep. So it starts with number one, a good product or service that has staying power. Like, you have to base this all around something that people are going to want a lot of, and for a long time. A lot of people chase the next gadget out of China. Like, how many hoverboard sites were there?
Oh, tons.
Yeah. And it's like, again, can you make some quick cash? Yeah, but someone gets stuck holding the bag. Someone is the last mover, or didn't quite market it as well, et cetera. And you end up with this. So unless you're coming in with an existing list, and listen, there is a way to build a sustainable model around launching different products. There's companies that do that. Even Guthrie Ranker has done a good job of that. They're bootstrapped and they're multi-billion dollars in revenue.
Yep.
Like, they're
great.
A lot
of work with them. Yeah.
Same. And they're great people. They've done a great job, but they have a methodology. They launch it quick. They spend a little money. If it works, they keep going. If it doesn't, they're out. They also acquire a lot of brands once it already has traction. So they know they just can put their megaphone on it, so to speak. And they have so much infrastructure around DR marketing that they are able to replicate that. Now, that being said, they've struggled in recent years because of the changes in digital happened so rapidly. They didn't keep up. Now, they think they've adapted enough now, but it took them a little while.
Yeah.
And so there are scalable ways to do that, but that's a whole infrastructure they built. And what it started with was a few key products that skyrocketed. Something like Proactive is one of them, where Proactive is still a multi-billion-dollar company. Nestle owns it now, but they continued there's a whole new crop of teenagers with acne trying to solve it every year. And they continue to tap into that. And now they have all the model in place of exactly how to tap into that. And that's why they got a little shaky, was when that model changed, they had to shift, but that's part of running a long-term business too. So, but with an individual, it really does start with that sort of core product or service that is your bread and butter. And that's what everyone will call it. And, it's an age-old business idea of the rinse and repeat part of your business that continues to just bring in the cash to keep the business operating. So, sorry, I got a chip in the back of my throat.
Yeah, no worries.
And so you look at any major company and that exists, Google, search. Google is a lot more than a search engine. But that search engine still funds everything else.
Yeah.
Facebook and ads, Amazon at this point, I don't even know what their bread and butter is because they're so widespread. But
I'd say maybe AWS at this point, maybe.
Probably, yeah. But for a long time, it was books.
No, correct. Yeah.
And that can shift, obviously. But the point is, you need to figure out what is that entry point that's going to be your core business that can allow you to expand off of it over time. And for a while, just focus on that and build that out. For Hawk Media, our marketing services will probably always be our core business, but already 8 years in or 7.5 years in, we've got a venture fund, we've got a financing arm, we've got brands that we own pieces of, we've got all sorts of other business units that we're spinning up because we have this platform and cash flow to do so. Yeah. So, the cash flow piece is super important for sustainability. and that kind of brings me, it's number two, so to speak, but unit economics.
Yes.
Selling your product with enough margin that you can market it, that you can have a team built off of it, that as it scales, you end up with a lot of free cash flow that allows you to build the company. Because if you're always having to change fundraising, which a lot of companies do, you're reliant on the market and the funding market, which when there's a downturn, you're screwed. So even our own fund, because we invest, we look at unit economics. If this company, like if there was no money on the market anymore, could this company survive? And that's super important. So making sure you have the right margins in your business so that you can build this without funding really is key. And there's a lot of great bootstrap companies. And my favorite example of this is I have a friend that sold his e-com company for $1 billion and another friend that sold his e-com company for 200 million. On the surface, you're like, yeah, well, I'd rather build $1 billion company than 200 million. Here's the thing though, the $1 billion company, he only had 9% of it left in ownership. He had raised so much money. He was at 9. So he made 90. The other friend was completely bootstrapped, made 200.
Made 200.
So,
yeah.
And by the way, I don't know. I know this surface level. I don't know all the details, but I do know the $1 billion company was not sustainable and was near the end, so to speak, when they sold, because they were so used to just burning cash. And the bootstrap company, there was very little risk. He was going to sell for 200 million or 100 million or 50 million, but he was fine. And so having that company that can just run without outside capital, also a big part. And so that's the foundation part of it. Like build that foundation that you've got bread and butter. You're doing it you're investing in something that you could see long-term traction with, there's a need for what you're building. Because I do see a lot of people spin up the next tchotchke that it's a hype-driven thing that is gone in a month. And I guess you have to go through a few of these to realize that that's just how the world works. Like my first business was in Beanie Babies, people spending thousands of dollars on beanbag animals, and now they're just all stuck with them. Like it's that kind of thing where it just doesn't, you have to be careful with these hype products, because I think TY has probably done fine, but nowhere near what they did. I actually wonder how that business is doing.
Yeah, I have not kept up with them, but I'd wonder the same thing.
Yeah. But in a lot of these drop shipping or, OEM companies where you're getting a product from China, it's going to be short-lived, and you've got insane competition. Like spend your time figuring out where there's a need and tapping into it. Where do people actually want something? Like even if it's a niche, like you're going to build the pots and pans for the ethnic community. There's a company that I'm thinking of did that. Like, great. Like that's a niche. That you have to find something underserved and build it. And that's building a real company, because the idea of chasing like the next hot item, you're always going to be behind unless you invented it. And so like the successful example of this is pop sockets. The things, those guys are amazing. They spent the majority of their money on lawyers to make sure no one ripped them off. And it was so brilliant that they now have, in that, by the way, also basically bootstrapped, like a little bit of family money that was put into it, and they took off, and it's got to be $1 billion revenue company now. It's insane because they own the market and they did it, but they invented that. Again, I don't know how many hoverboard companies did very well, but I doubt many. And so then once you figure that out, which is hard, it takes time. Don't rush it. Go work for someone. Go do some consulting. Do something else while you figure it out. I think forcing the idea of starting a business is also an issue. And you're going to waste a lot of time. Your expected value, the actual money you're going to make is going to be less than if you just got a job. And you're not going to learn a lot of the time if you're just chasing a BS product. Like I love how people like, you have to fail because you'll learn a ton. It's like you learn more from success than failure. Sorry. Like it's just the truth. You can pat yourself on the back when you fuck something up, but the truth is you fucked up. And hopefully you learn something. A lot of times you don't. A lot of times you blame it on timing, or maybe it was timing and situational or whatever. And that's just, I always say that there's probably a 70% X factor in the success of a business. 30% is having the right team, idea, product, everything. 70% comes from just timing, luck, situation, serendipity, et cetera. So swinging the bat, trying things is super important, but starting with a good bet is also super important.
Absolutely. So, putting your best foot forward. And then guys, with the product thing, like what Eric's saying, if you are selling a gizmo or a gadget or a tchotchke or whatever is trending, that's okay. That market could very easily support a cash cow product that you spin off of later. Or you have a cash cow product that's great. That doesn't mean you can't tap into a tchotchke style product that you sell to your audience for a quick cash boost. But you got to have that stability.
But you've built an audience. So if you have that audience that you're building and you're building a brand, and that was going to be my next thing that I get into, is like the idea of building a brand. So it's not about running Facebook ads with a cost per acquisition and a conversion rate and da. That is part of it, but it's part of it. You have to build a relationship with your customers so that they come back and buy more. Because if you're competing with all my clients, which we're coaching on merchandising and we're coaching on having multiple product offerings, and you're selling one product that they buy once, we'll beat you out all day on CPCs because we can afford to. We can spend tons of money compared to you because we get a huge lifetime value of a customer compared to you. And that's who you're competing against. And so when you're building these things, having multiple offerings and building a brand that people come back, because the other part of this is if you have to market every customer you get, you have to advertise to, it's super expensive. Mm-hmm. You need word of mouth. You need repeat purchases. You need these things, especially in e-commerce. And then the other piece of that also is don't be afraid of omnichannel. If you've got a great product, sell into retail, sell everywhere you can. Like focus on being the best at one thing. And I really mean that. Like I always believe this, which is where our company comes in. Like if you're a great marketer, then be a great marketer. If you're not, hire great marketers. Don't try to be everything in your own company. And so it's the same thing when we talk to e-com companies that are building their own software. It's like, you're not a software company. You're a product. You're a fashion company. Stop. And so, lots of e-com companies think they're tech companies. They're not. Unless you're building tech to sell, you're not a tech company. And so be really careful. Like we've watched we watched a really big e-com company build their own email service provider, spend, I don't know, it was probably like $50 million on developing this stupid software that never fucking worked, because every good ESP has spent much more than $50 million at this point. Yeah. And they're never going to compete. And it was like, why did you do this? Because they had a CTO that said they can do it better. It was ego. And so it's the same thing when you're building. It's like, focus on building a great product. That's your thing. You have to have the best product and best customer experience, and everything else, don't worry about it. And that, if you do that, you're going to get repeat business. You're going to get people talking positively about you. And that's what's going to start to create that sustainability. So it starts with that product that people can talk about, and you start to build your brand. And all a brand is consistency, good and bad. Whatever you're consistent with is what builds your brand. If you're consistently shitty to your customers, you're going to be a brand known that's shitty to their customers. And what's a good example of that?
I always say that a brand is earned, not built,
right.
Through
both good and bad too.
Yep,
so like
exactly.
About Cox or Comcast, which I think unanimously are called the devil because of how bad they are at customer service. They built that through consistently being terrible at customer service. And then you've got, what would be another good Starbucks. It's just consistent. I don't know how many people there are people that love Starbucks, but most people are like either way, whatever, it's Starbucks, but you know what you're going to get. And so when you're traveling around the world or you're traveling around your town, you can get it. It's quick, efficient, good, consistent. That's the brand. And so it continues. That's what you build, whether it's a luxury brand, et cetera. And there's a lot of intent behind it, but that intent comes with what you consistently deliver. And so you hope there's intent. If not, your brand can own you, and that can be a bummer. So thinking about those kind of things again, and then getting into, can I market this profitably? Can I run Facebook ads profitably? Can I run different advertising channels? Where can I find a vein that can grow this profitably and grow sustainably? Like, as we just mentioned earlier, is it better to do 10 million in your first year or one? Sometimes one. Because 10 million, if you can't, the most painful part of a business that I've seen is not growing, it's shrinking. Yeah. If you're at $10 million in revenue and then the next year you do 6, you are fucked.
Yeah.
Like you have you're probably got 20 million in inventory. You've probably got a whole staff to support at least 10 million or 20 million in sales, because you project it out, because we're all optimists as entrepreneurs.
Well, yeah, and you're definitely bloated because you grew so fast. You were overindulged on everything. So
exactly. And generally you overcompensate for it because you're underwater. So you hire a bunch of people or what, it's like, that's what ends up happening. And then you start to get systems in place. And so if you go too fast, it can go like that.
Yeah.
And you see it all the time. So, that doesn't mean slow down, go as fast as you can. Meaning, if you can build a foundation and feel confident that it's scaling in a way that's going to sustain, and you can build the infrastructure in as you go, do it. But different companies can scale at different rates. Like, we've all seen companies that have done 50 million in their second year and things like that. Like, it happens, and they do succeed. but you don't want to force it. And you don't want to overinvest and overgrow, which is frankly what happens in a lot of the VC world, where they raise these big rounds and then go, oh shit, we can't grow. Like there's nothing to do. So growing sustainably is super important. And as an entrepreneur, I understand the lack of patience. Like I hate it when we're not growing fast and we're having to reinvest in infrastructure. It's like, it's painful. We're doing it right now, but well, thankfully over time you do it enough that you realize like growth isn't linear. It's like a staircase. You like grow really fast and then stop for a while, then grow really fast and then stop for a while. And like that and so you just, when you start to look back, you realize and the steps get bigger as your company gets bigger, meaning the up goes faster, but then it flatlines for longer because it really is hard to break through. So I had our financial report out earlier and it literally looks like a staircase. It's really funny. And so you learn these things. And what's important about that is then when you know that's the case, it still means you push, because the only reason you get out of that staircase, that next step, so to speak, is you push really hard to find the ways to improve, but you don't get it over your skis in a sense. That's why I keep going back to profitability, because again, I'm all about sustainability. And if you can keep profitable, and let me explain what I mean by profitable. I mean, you could be profitable. If you've got cash, like you made money last year and you want to reinvest it, I get it. Like that's fine. The point is, at any point, you're not going to end up negative. You're not going to end up underwater because you are keeping an eye on the financials. And I see a lot of companies just go for growth, never keep an eye on it, and then they end up in debt. Like we do a lot of M&A and a lot of investing, and the amount of companies that are in debt when they shouldn't be because they just did stupid things. It's like, why did you did $1 million in revenue last year and you had $1.5 million in payroll? Why?
Yeah. Yep.
Why'd you overhire? Like, what was there something that someone was going to do? Like, theoretically, you should be hiring for growth. And if those people didn't create growth, why the fuck were they there?
Yeah. Why was it kind of a long time ago? Yeah,
software is different. I'm talking ecom, but you shouldn't need an infrastructure and a staff. Too many companies have bootstrapped or done it scrappy. Excuse me. That I don't buy that you need that much waste to grow an ecom brand. Marketing, sure. If you find a vein, like, hey, we know now that we can spend $1 and make 10 through this advertising, and we know we can scale it. Yeah, sure. Throw more money than you're making at it. If you can grab that cash somewhere, that makes sense to me. Like that's scale. You can do it faster. Fine. But a lot of times people spend the money in the wrong place. It should be spent on growth, not spent on sustaining, because that's where, again, you can create sustainable brand. And then it just allows a lot. And so that's kind of the basis of it. But then it gets into focusing on the way you do marketing, like make sure customers coming in are coming in profitably, but also keep an eye on how do you get that word of mouth and that evergreen side. Like you don't want to have to advertise to get customers only. So what are the other things you can do that continue to drive in customers when you're not doing anything? Partnerships, PR, SEO, organic, word of mouth. How do you drive these things that you don't always have to be just throwing money at another digital channel to get more customers? Those are the kind of things you start to think about. Like it shouldn't just be about a CAC to LTV. It should actually be like, how do we create something sustainable? Because I can tell you no brand over, 200 million in revenue looks at CAC to LTV. They're looking at marketing spend and revenue. Like it's just, how do we grow this thing? And so when you think about it a little more that way, you having different channels of distribution and channels of sales that come through that aren't just about spending money will actually allow you to, again, be more sustainable. In COVID, thankfully, we've built such a great channel partnership ecosystem. Like we all got hit when COVID started, but we all looked out and said, well, these companies are still going. And we started sending each other business and looking out for each other and got each other through it in a very positive way. I mean, we grew a lot, and so did our partners, because we were all looking out for, well, who's still active? Let's focus on that, because a lot of people froze up. Same thing goes with your own customers. Like go talk to, align with other companies, share lists, that's one partnership way of doing it. Again, content partnerships, influencer partnerships. These are all things that don't necessarily have to just be throwing money at it. It happens, and a lot of companies will, but you can probably put some time in and find some relationships that it isn't just about that.
Absolutely. And everything you're touching on right now, it's so timely for where we're at right now after iOS rolling out and everything else. I mean, I'm so sick and tired of hearing about iOS 14 is like the killer of all these businesses. But the reality is you skipped the build phase of your business and tried to jump in from like in our company's build, grow, scale. You went from build, you skipped grow, and now you think you're scaling, and it worked while the advertising channel was perfect. But the first time something changed, all of a sudden, basically the tide went out and it proved that you weren't wearing shorts. And
it's my favorite thing to point to, because like people didn't stop spending money because of iOS 14.
No.
Same consumer spending. Well, it's declined slightly, but it's Q2, Q3, it always does.
Well, we're prepping for Q4. So
yeah, exactly. So, but people in general, like people didn't stop spending money. So if you're seeing a decline in your business, you're just doing it wrong.
Yeah.
Like you're not marketing right. Your
economics aren't set up right to be able to support it.
Right. And tracking on Facebook is part of it too. Like when people look at these tracking numbers, like Facebook only has a 7-day tracking window now. The average purchase cycle for a $50 product is 3 weeks. For $100, it's 5 weeks. For $200, it's 6 weeks. Like a week is nothing.
Yeah.
If you have and if you've got a product under $50, it's already difficult. Anything under 35 is almost impossible online unless you have some other unique way of selling it. Like it's not going to work that well anyways. So like 50, you want to be 50 over, and the higher, frankly, the better a lot of the time, as long as the product can command it. And so you end up looking at these tracking shifts and going like, okay, so it's now tracking wrong. So it doesn't tell you the right numbers anyways. And if you're seeing like actual revenue, like tracking declines is one thing. And there are declines in terms of the actual performance of Facebook because you can't track as well. So there are declines, but like you've got to have, marketing is kind of like a investment portfolio too. Like if you're all in on Facebook to run your entire business, well, that was a bad move. It's like investing your entire life savings in Facebook as a company. Like both are bad moves. So I just wouldn't, and that's pretty much what you're doing if you go all in on Facebook as an advertising channel. Like you got to look at Google, you got to look at podcasts, you got to look at TV, radio, you got to look at influencers. You have to look at, again, organic content, whatever you can do to drive word of mouth. You have to look at distribution channels like retail and even other online retailers. Like if you're truly building the best product and that is what you're focused on, where it's sold shouldn't matter. And a lot of these companies are now looking at e-com and your D2C as a marketing and community engine, not as the best revenue stream. Because even during COVID, where everyone was shut down and locked at home, consumer purchases went from 13% online to 30%, but it's still 30%. And it dropped back down to like 25. I don't know where it is right now, but it was down to like 25. And so a quarter of sales are online, and that's Amazon is 60% of that.
Yeah.
Walmart's 5% of that. And then there's a few others that make up. So like you end up with like, let's say 20% is actually direct to consumer of the 25%. So you're talking about 5% of consumer purchases are actually done directly from the company. And that's where you're going to sell your product. You've got 95% of the revenue you're missing, or I guess opportunity. Like do both, because owning the customer there and having your own e-com is also valuable. But the idea of direct to consumer and staying only direct to consumer, the margins are bullshit in terms of like the idea that like, oh, well, we're cutting out the middleman. Yeah. And you're exchanging it for marketing expenses. So like that Everlane argument doesn't actually.
You're still spending that same amount, if not more.
Yeah, correct. With more risk because you hope it works out that way. And you still like, I believe in both omnichannel again, all the way. But these are things that you think about when you're building a more like long-term, what am I going to do for the next 30 years? And I really like that mindset of like, what can I do? That doesn't mean it's actually going to be what comes true, but at least set yourself up that way. Like there's an old line that if you don't build your company like you're going to keep it forever, you will. Yeah. So it's always a confusing thing to say, but the idea is you want to build it like you're going to keep it forever. And then you can sell whenever you want. I get offered to sell my company probably weekly for the past couple of years. And before that regularly as well. And then you can make that decision if you ever want to get out. Like you didn't build a company to sell. You built a company that you would be happy keeping if it never sold. Correct.
Right? Because that's the other thing. I get people all the time, I'm building this brand to sell. I'm like, well, if you don't even want it, why is somebody else going to want it later on?
Yep. We know we're dealing with an acquisition right now like that, where the guy's like, yeah, I've been building this to sell and I want out. And then he's asking for multiples that he would get if he wanted to stick with it for 5 years. but we already know he doesn't. So he's not going to, it's like when we've bought a lot of agencies and we've been offered, we know what the market is. My wife's in PE too. So like really around that world. And we're looking at it, we're like, we've seen this story. It's like, he's like, I'm talking to multiple parties, and I'm like, great. And either you're going to find an idiot, which is very rare. Most of the time, you're just going to get a lot of people that waste a bunch of your time, and you're going to come back to us in a couple of months and be like, oh yeah, I got nothing. So yeah, it's the age old story of like people read headlines thinking that, again, my friend's e-commerce company sold for $1 billion. Most people that are the untrained eye thinks he just made $1 billion. He made 90 million. Nothing to complain about. Made plenty of money, but he did it in such a risky way that it was binary. He was making 90 million or zero. There was no middle ground on the way he did that. Versus my other friend that made 200 million would have made 50, would have made 20, would have made 100, depending on whatever target he hit when he decided to sell. And if he didn't sell at this point, he would have kept running it profitably until the deal came along that he wanted.
And but he's just fine with it.
Yeah, correct. Yeah. Totally fine. In fact, this is actually public. I had a guy named Barry Turner on my podcast that created Lenny and Larry's. It's like, what do you call it? Protein muffins and cookies and stuff. And he ended with, he's like, yeah, I got his kind of sort of origin story. And he's like, then I sold my company. We were doing about 30 million in EBITDA profit, and he had bootstrapped it. It was him and a partner. He was making $20 million a year. And I'm like, how was that day? And he's like, worst fucking day of my life. Like, okay, well, explain that. He's like, well, I already had all the cars I wanted and the house and the vacation house and went anywhere I wanted, like 20 million a year. I've done a lot of analysis about this with friends that are successful. You'll spend 1 to 2 million a year on a very, very, very nice lifestyle. And that's it. Again, we go back to like barring a yacht or a jet, that's all you're going to spend. You want your own jet, it's expensive. You want your own yacht, it can get expensive. And I mean big yacht, small boat, whatever, 50, 60 footer even, like you're fine. But you start to get really pricey. But 1 to 2 million, your lifestyle is done. Like there's no more money to spend. So if you're making 20, you're set.
You're done.
So after that, he's like, so I sold, and he made, my guess would be like 400 million. Because he made $400 million. He's like, and I invested it in commercial real estate and became a real estate developer. I'm like, so how is it? He's like, it fucking sucks. He's like, I was running a cookie company and now I'm a real estate developer. I'd rather run a cookie company. Like, I don't know why I did it.
Yeah.
And so you hear this a lot. And again, that goes back to that sustainable kind of approach to business where it was how people did it till, let's say 20 years ago. Like the idea of selling your business was usually I'm retiring and don't have the successor, or I'm done, or I'm burnt out, or whatever it is. Like it wasn't an event. They call it, like an event. You had an event, you had an exit. Now it used to be more, I'd say 30 years ago, it used to be more of like a bow out of like, it's a landing. I need someone to take this. I'm going to take some money. I'm done. It wasn't life-changing. Usually it was just a way to get out. That changed, private equity got bigger, the multiples started happening, et cetera. So that changed, and it makes sense why it changed. But still, I always remember that if someone's willing to buy my company that's smart, which by the way, I really like doing deals with smart people. Like when you deal with idiots that are trying to buy it, then you end up with a lot of unpredictable parts of it, which suck. So when a smart person wants to buy my company, it's inherently because they know, or they're confident that they're going to make more money than they're giving me. So if that's the case, and it's not because they're strategic, it's because they like what I'm building, that means that I'm better off keeping it.
Yep.
Unless I need that money, or unless, back to the point, you're burnt out, you're done, something they don't, whatever it is, you're retiring, those are reasons. But it's become this, sexy thing to sell a company. It's kind of like, I have enough friends that have done it. Their lifestyle is no different than mine. Yeah. And except for I still have something to do on a daily basis.
That, and then you've got the people who, like the people who sold and either regretted it or did a bad sale. There's been a lot of things.
There's a lot of those.
A lot of those on both sides. Like the person buys something that they think is sustainable. It turns out to be something that's not. And it's obviously the buyer's issue at that point. But I know people who've sold and like who thought the sale was so sexy. It's like you're clearing $1 million a year. It's a small company, but you're making $1 million a year free in your pocket, and you're going to sell for 3 million. Or 4 million. Like, why would that number make sense?
And taxes come into play.
Yeah.
And like 4 million turns into 2. And it's
So you sold for 2 years of your earnings, and then now what? Now you're going to have to start all over and build another company. I mean, the cash flow is more beneficial than the sale, but people get so locked up.
Well, that's the other thing is if you spend that money, you're screwed. You got to go to work. So you invest that money to try to do something with it. And then what do you invest in that actually is like this? Actually, I watched this happen with, frankly, my dad's business. They sold one of their businesses, put it into real estate, but real estate's a great asset, but it earns about a quarter of what you would earn if you just kept the business. So all of a sudden their cash flow dropped to a quarter of what it was just keeping their business, which at that point was actually operating itself pretty well on these. It was waste. So huge contracts with cities. It was like, cool. You have a bunch of assets that frankly, once you get into real estate, you never sell it. So you're never going to touch that cash. You're just touching the cash flow. And now you make less money than you did. So what the fuck was the point other than you sold the company? Woo,
you sold it. Yeah.
Get a headline. So again, back to so that's the exit side. And again, it goes to the cash flow side too. If you can build something that you can rely on, it takes time. It really takes time. The first few years of a startup are exactly what everyone knows they are. They're volatile, they're uneasy, et cetera. But if you can build something that you can build towards sustainability, you get to the point like we are now where it's like, God forbid there's a recession. We have everything so dialed in that and we have no debt. We have no investors we have to report to. So we're not, the worst thing that happens to this company is it makes less money. It's not going away. There's nothing to go away. We have no real overhead. It's just, we'll shrink and we'll have to ebb and flow if we screw up. And that's why I definitely push my team not to screw up. But that is the worst case scenario we're at now is if your idea, and this is where the almost undue stress comes in. If you're trying to sell and you shrink, you're fucked because your multiples just got shot. Nobody's going to give you the same multiples. You have to have over 40% growth to get good multiples on your business. And if you don't have that, that's where you start to get hit by private equity and they're going to screw with you, et cetera. And it sucks. So you have this undue stress. If you plan on keeping it for 30 years, then again, I've had it happen where someone comes and goes, we want to buy you. And then they start looking at, they try to play a game of us, we're month to month. Everything we do is month to month and a la carte. We try to keep our whole mission is accessibility to great marketing. We want to be super flexible and nimble and easy to get access to great marketing. When we talk to PE, sometimes they're like, well, it's all month to month. That means no assured revenue. We're going to have to discount for that. I'm like, I guess there's no deal then. Yeah. See ya. And they're like, wait. It's no. We're not playing games here. I like my business. If you don't like my business, then move on. It becomes that conversation when you can make it sustainable. And that's, again, we're talking a little too much about an exit. The other side of it is the truth of that, which is it's sustainable. You make, when the sun shines, you make hay. If it gets a little dark sometimes because recessions come, you batten down the hatches and stay careful. And then you open up again and you just keep that process going until one day you decide whether it's you want to retire, maybe you work until you die and then name a successor when that happens. Whatever that is an option. And if you keep that as your mindset, again, I could sell my company. I've been offered many times, even this year, for more than I'd ever need. And I just like doing this. So I keep doing it. And we set it up that way. My partner and I, 1 year in, got offer to sell it. It was a lot of money at the time. And we decided to keep it, but set it up. We were like, let's make this a marathon, not a sprint. Let's make it so that we're here for the long term, which also means hiring people to do the shit you don't want to do. Self-retention is the most important part. If you find you find yourself dealing with shit you don't want to deal with, if you can't afford to hire for it, at least reasonable amount of time, you're the most expensive employee as the founder. So if you can't afford to hire someone to do a part of the business that you want to then you're doing something wrong. Your unit economics are off, whatever it is, something's wrong if you can't slowly get people to do parts of the business. Again, when you're starting out, there's nuance to this. You have to get enough money going in, but there has to be a path to hiring away all the jobs you don't want to do so that you can focus on what you're good at, which usually is in line with what you like to do.
Absolutely. No, dude, this was great. And it went all over the place. I enjoyed us chatting. It's a lot more fun than a structured topic. I always just like to see where it goes. And guys, if you are listening to this, I highly recommend you listen to it again. There is a lot of stuff that was discussed in here that may not be right for you right now, but in a few weeks, a few months, a year or so, you can come back to this and go, oh my God, I get what they're talking about now. But also take a look at this and then start taking a look at it from your business and go, hey, am I exhibiting any of these traits that I maybe shouldn't be, or am I getting, my opinions or my thought processes are getting soaked up by what the flash and the pan, the hype in the marketplace is, versus am I building something real and sustainable? Like, the whole reason you're building this business is not to work yourself to death, not to not make any money. You're trying to build a business to give yourself lifestyle and freedom and time with your family and all of that stuff. But if you're not doing it right, which Erik talked about a lot today, then really doing it for nothing. There's no point to it. And it cannot just be for the money, because I can tell you, Erik can tell you, the money gets old after a certain point. It's not enough to keep it going and make it worth your time.
When you realize like your personal expenses can only go so far. And then once it's covered, it's covered. You've made enough money to pay for the things you want to pay for. And it isn't as far away as people think it is. Like, you hear people making billions of dollars, whatever. It's like, they don't spend that.
They don't spend it. Just sits there and makes more.
Yeah, exactly.
Yeah. We've got a couple of friends. One in particular is he's worth about, I don't know, 400 or 500 million right now. And he swears, he tells everybody, he's like, dude, it doesn't matter, because it's hard to spend $1 million a year. He's like, it's hard to spend that money. And then he goes, when you get good at spending $1 million, you maybe can spend, like you said, another $500,000 to another $1 million tops. Because beyond that, he's like, you're not spending it. So and he's like, even people who do spend $1 million, they're trying to spend that $1 million.
Yep.
It's the average person who's a millionaire is not living that kind of crazy. No,
the number
to spend that kind of money.
1 to 2 million I said is my friends in New York and LA, like most expensive places to live. Like you live anywhere else, there's no fucking way you can spend that money. Like, most of that goes to, a starter house in LA now is like $2 million.
Yep.
So like, totally. That's why you can spend it. But like, I'm talking starter house. These people aren't living in starter houses.
No.
That's why you can spend that. But yeah, I mean, most people can. And then you realize, like, and I thankfully never got into it, but like, a lot of people, they'll buy the Ferrari, they'll buy the Lamborghini, whatever. You do that once, you drive it a little bit. Unless you're selling products to try to tell other people how to get rich, it seems like most people fall off that. Unless you love cars. I have a couple of friends that just love racing. I used to race, and they, a couple buddies that both bought McLarens, and they love it, but they didn't do it for flash. They did it because they love that car, but they bought it. They're done. That was a few years ago, and they've continued to make money. They're not buying a third one and fourth one and fifth one. It's like, once you cover those kind of basics, then I say basics, it's the most obnoxious way to put that. But, once you cover your, those, kind of early desires, the new money desires, so to speak, then you're like, okay, I got my house, I got my car, I got whatever that thing was that I couldn't afford as a kid, that now I can, and I'm excited. And then it's back to work.
Yeah. So you got to have another reason for doing it. Like we are a car family. Like my kids loves cars. My wife does. We have all the toys, but nobody knows for the most part. It's not like I'm not buying a new one every day or anything like that. And it is, once you get it, like when I bought my first supercar, I was like, this is so awesome. And now it's like, I love it, but it's not like, I'm not. So I'm with you. The money stops, guys. So the reason for building the business has to be beyond the money. And I know the money is exciting at first, but you want to build something sustainable, you got to look beyond the money.
Yep. And the money will come. I know it's cliche, but the money will come.
Absolutely. Well, Erik, hey, I had a great time with you today. Really enjoyed everything you had to share. Guys, what I want you to do right now is make sure you're subscribed to the podcast at buildgrowscale.com/podcast. Erik, tell them about your podcast real quick.
Yeah, just Hawk Talk, HAWKE Talk on, we're on Spotify, we're on iTunes, etc. We basically interview people that are top of their game in their industries on their origin story. Like, how the hell do you become? Gary Vaynerchuk was on it, Chris Birch, Rachel Zoe. We've done 50 something now. So tons of amazing people that have just basically, frankly, over the past 7 years of meeting tons of incredible people, is finally like, okay, I'm going to sit down and actually interview these people. So it's all different fields. We have a couple Olympians, we've had Aaron Davis, Sean Merriman, all sorts of different athletes as well, musicians. Just continuing to interview. Like, it's always been fascinating to me, like, business aside, entrepreneurship, I think there's a lot of great interviews around that, but just in general, how do people become these high achievers in their own field? Like, cause it's like, my line at the beginning of every one of them is like, would you just come out of the womb and like start playing guitar or start throwing a football? Like, most of the time the answer is no. Once in a while you get that person's like, 2 years old, I pick up a basketball, whatever it is. But most of the time it's some crazy set of circumstances that they end up in this thing, and it's never consistent. That's the cool thing about success in general. I have not seen anything consistent other than just going for it, which is not really a consistent. That obviously you have to go for it. So,
Yeah,
like
totally.
the stories are, so it's been really fun because for me, it's selfish. It's just like, these people are incredible. I want to talk to them. Why not record it?
Why not record it? Yeah. So this is hawktalk.com, right?
Yeah, we have hawktalk.com, but you can just go to Spotify or iTunes and just type in Hawk Talk.
And then if they want to find out about your main business, Hawk Media, where do they go for that?
Hawkmedia.com.
That's easy. That's the .com, right, guys?
Yeah.
Awesome.
But I think it's hawktalkpodcast.com. Actually, I just realized I don't think we got hawktalk.com, but yeah.
Okay. Hawk Talk Podcast. You could obviously Google it or just search it up on your iTunes or Spotify or Stitcher or whatever you're on. And then hawkmedia.com is where you can find Erik and everything that they do with their outsourced CMO services and all of that. Highly recommend you guys check them out. And again, if you're not subscribed to the podcast yet, make sure you do that. It's at buildgrowscale.com/podcast. And with that, guys, we will see you in the next episode. See ya.